Hello my viewers, I trust you are well. In this video, I am revealing the best strategy using the MACD indicator with having the knowledge of smart money concepts. So without wasting time, let's get on with the video. Moving average convergence divergence, also known as the MACD indicator, is one of the most simplest and still used indicator till this day. It is a trend following momentum indicator that shows the relationship between two moving averages of price. So first, let's apply the MACD indicator to our chart. We will go on Indicators tab using Trading View. Type in MACD. We could select the first one that appears, but I like to use the one made by Chris Moody. Now, before we start, we first need to know, how does the MACD operate? It consists of four components. The MACD line moves faster and is more sensitive to price movement, which is why it is more rough than the signal line. Signal line reacts slow to price, which in turn makes it much smoother than the MACD line. Next, we have the histogram, which represents the difference between the MACD and signal line. For example, if the MACD line crosses above the signal line, the histogram will turn blue. If the MACD line crosses below the signal line, it will turn red. The gap between the MACD and signal line will represent a higher histogram. Finally, the fourth component, which is the zero line, that simply represents the center of the MACD indicator. The way traders use this indicator is they identify the crossover between the MACD line and signal line. Let me show you an example. If the MACD line crosses above the signal line, it indicates the market is in an upwards momentum. If it crosses below the signal line, it indicates a downwards momentum. Traders can also use the size of the histogram to determine the strength of the momentum. If the MACD line crosses below the signal line while the histogram is getting larger, it shows us the downwards momentum is getting stronger. Same applies if the MACD line crosses above the signal line. While the histogram is getting larger, it shows us upwards momentum is strong. So we know the MACD indicator uses moving averages. But why is the MACD superior than the moving averages? Well, let me show you an example. As you can see, the MACD shows early reactions in the trade compared to the delayed moving averages using same settings. Now let's talk about a strategy we can use with the MACD indicator. Firstly, it's a common mistake by using the indicator by itself. Let me show you why it's a bad idea to use this MACD indicator alone. There is a downtrend in price, but the MACD shows a buy signal. Notice how price is contradicting with the MACD. This is why we shouldn't only base trades on the MACD itself, because you can't trade against the trend, and we should never do that. So a simple high rate strategy I use is combining the 50 moving average plus Killzone time with the MACD indicator. So we can safely follow the trend using the MACD with correct direction in the right kill zone. I'm sure you know how to add moving averages. So moving on, these are the kill zones that I use. London kill zone 0 AM to 5 AM New York time zone. New York kill zone 7 AM to 10 AM New York time zone. I will show you which indicator I use to help me learn the time zones by adding the vertical lines time zone indicator by Chris Champman. Then after adjusting the times to the kill zones I mentioned before, which I have learned from the king of smart money, ICT. So this is how you trade the strategy. Step 1. Identify the crossover with the MACD and 50 moving average on the 1 hour time frame, circled here, which appears to be a sell signal. Step 2. Identify the crossover on the MACD and 50 moving average on the 15-minute time frame in the kill zone times, circled here, which is showing a sell signal already. Step 3. Once a crossover on the 50-minute time frame, you can enter the cell circled here. As you can see, using a 1.5 times the stop loss as the reward to risk ratio. As you develop and have more confidence in the type of trade, you can adjust your reward to risk ratio much more. Next, I'm going to show you a buy signal example. Starting with step 1. As you can see, the crossover has been identified on the MACD circle here. But you can see the 50 moving average did not cross and it is not in the Killzone time. So we wait for confirmation. Step 2. We have entered the London Killzone circle here. With the MACD and 50 moving average crossover in the Killzone times, we have confirmation to proceed with the order. Next is step 3, where we enter on the trade. We buy within the Killzone time with a stop loss that is suitable to your trading account, but I usually place the stop order under a previous low. Using a 1.5 times risk to reward ratio, price easily pays the trader. Following protocols is part of the business. Please do like and subscribe to my channel and feel free to comment, as I will be updating this channel with a lot more content to come. Until the next video, peace guys.